Gold and silver both recovered strongly after a setback, a strong setback we have seen before. And now the first buyers are coming back to the markets. Is this a good indication? Can we expect that the market wants to start to the moon? Or is this just intermediate strength and coming down later? So let's have a closer look what the market is saying us and what the charts are telling us and how we can react as a trader. Yeah, as I mentioned, the market came down quite strongly, especially gold came down in a surprising way maybe for some of us, at least for me. I did not expect this. In the first stance, I thought it's a good chance to buy when the market is triggering some higher highs, but it did not trigger anything, so there was not a chance to go long. But now the picture changed maybe, and let's have a closer look because I think there is something we should talk about. So having the chart in mind, we could see that the market came back here from the bearish market here, from the bearish side here. You could see that the market was strong, at least in the lower time frame here in the 4-hourly chart, or especially in the 15-minute chart. You can see this is something I really love to see, because more or less it is a first wave to the upside, an ABC to the downside, a strong third wave, a shaky fourth wave, and something looking like an ending diagonal at the very end. So I can imagine this could be something like a 5-wave pattern to the upside in a very typical way. And now we could expect something like an ABC pattern or something like a corrective pattern to the downside. You may remember the time we were talking about this one, a strong movement to the upside without any internal structure, and then an ABC pattern to the downside and a continuation to the upside. And exactly that's what I expect here to come, in this case with internal structure, the 5-wave move to the upside, which is very typical. Some ABC pattern here may indicate, when breaking this intermediate level, that there's another one coming to higher prices here in this case. But is this really opening the door for more bullish stance, for people buying us to 2000, 2100 and even to higher grounds? Yes, it is possible. It is still possible, because the way down we've seen here in this case is still not breaking, or did not break, the 78.6 level, which is for us something like a last line of defense. When the market is breaking through this level, we give up the bullish situation on the big picture. This one and this one, it is good as long as this is staying above this. To be honest, this is just, it's not a 100% sureness that when the market is breaking through this level, there's no chance. Of course, there's still a chance that the market will continue after this, but probabilities are getting lower and lower the more we are going down. And below this level, it is below 10% that this will occur. It still can happen, but it is not a perfect situation. Of course, I would buy this market, but I don't want to buy this market when breaking through intermediate levels here. I only would buy this market when the market is giving us something like this. The good thing is, the good news, we already get something like this. Not necessarily, because this is still missing. The corrective pattern is still missing. We have to wait for this. But I think when the market is giving us some corrective pattern in here, we have a really nice situation that this will happen next, with good chances that this will continue after that. But unfortunately, we still have a chance that this will occur as well. So we have to clarify which one shall we expect and what shall we do, or how shall we react if one of these is coming in the next few hours or days. Okay, I've mentioned the big picture already, so I don't need to stress this very much anymore, but keep in mind that this could lead to these higher grounds here, continuing this strong move to the upside, this corrective pattern here, and this is still possible. But unfortunately, until now, it was still possible that this occurs here, bringing us to levels to 1600, which is still not invalid. It's still possible as well. So what shall we expect from now, from the very moment? Seeing this picture here, this is something we will keep in mind in the next few hours, definitely, because this is a really, really typical one, a 5-wave pattern to the upside. And when the market is coming back, typically this is into the corrective zone of Fibonacci, which is roughly 38.2 to 61.8. So I more or less want to see that the market is coming down into this area. Oh no, let's draw it a little bit better. It might be somewhere around this level here. If reaching this level, and that's really important, in an ABC pattern or in a very corrective way, not in a really strong pattern, so that we can clarify this is a corrective part and this is the strong move, then I suggest to go long. So that's what we plan. Please think about yourself, but I'm not sure whether this is fitting to you or not, but we would do something like this. Enter the market on the long side when breaking through this level here. So important is that we come down a little bit, more or less 38.2 to 61.8% of Fibonacci. So it's roughly, let's say 750 to 700, let's say 37, 36, somewhere around this level. It could be a little bit lower, but better is staying around the higher levels here. When the market is doing something like this, it would be lovely, because this is indicating we have a strong shooting to the upside. We have some weak pattern to the downside, not too strong to the downside, which is giving us a chance to enter a position when triggering the upper part. Really important is currently we cannot see this as a complete correction. Two things to mention about that. First is this end here on the downside, on the lower side here, is a little bit too high for my feeling here. I think this is not in a perfect size of a corrective pattern for this one. I think it's too small. It is possible that this is the end of the corrective pattern. It is possible, but probability that something will subsequently bring us to lower prices here is quite high. The second is, if you see the length of this one, it is really, really close compared to this part. And typically, there's some connection. Sometimes maybe you may remember that we draw something like this. And I like to see that the market is giving us a corrective pattern outside of this line. So somewhere around this level here. So I misdrew it. Just give me a second. I have to do it again. Lowest point here to the highest. Okay, here we are. So outside this level, so I would prefer something on the right hand side of this. So I don't prefer reaching this level. I prefer something inside this pattern. It could be a little bit more to the right hand side, but to the left hand side, I'm sorry, but it's somewhere around this level would be perfect, especially if this is something like a shaky movement, which looks perfectly for a corrective pattern, or an ABC. Both is okay for me to encourage me to buy the market if the market is breaking through this level. This is really crucial. I want to have something like an ABC pattern and then breaking through this level. And this is giving us a good indication to buy this market. I understand that this is maybe for some of you too short notice, maybe because it's in a 15-minute chart, but of course it looks quite similar in an hourly chart or 30-minute chart, whatever it is, but it's still intraday. So you have to have a look, maybe sometimes intraday or at least one time a day. After you realize something around this, then you can prepare your order. It's not something you have to sit next to the chart and overwatch the whole situation. You can just see every, let's say, 5 hours or 10 hours, you can check the market. Is the market doing something like this? And then you can easily prepare your order here if you really like to do it. Unfortunately, some people are asking me, is it possible to place an entry stop at that level? Yes, of course it's possible, but is this reasonable? Is it a good idea to do that? To be honest, I don't think so currently, because I still see a chance. It's not my preferred picture maybe, but I still see a chance that this is something like a 5-wave move to the downside. And when the market now is doing something like this, 5-wave to the downside, ABC to the upside, overshooting here, triggering a long position, and then turning around saying, oh no, this is typical. First wave, ABC counter move, third wave to the downside, then we are triggered here for the long side, and the market is turning around and we are absolutely unhappy. So I think in this case, this is not a really nice idea to enter the market here at that point. It is a little bit tricky, but in this case, I would not prefer this because of these 5-wave movement. In this case, we have a little bit of some kind of a rare situation because we have some kind of overlapping here. You can see that this, or even this one, are lower than that one. So we have some overlapping, which can easily indicate this as a corrective pattern because overlapping patterns are corrective. But unfortunately, first of all, this was a really, really short overlapping, only a few minutes around the Fed announcements, the US Open Market or Federal Open Market Committee message about the tapering or not tapering the market and anything around that. So we could see that the market was overshooting just a few minutes. So in this case, I would not overestimate the strength of this overlapping. The second is a 5-wave pattern. It can be something like a leading diagonal, LD, which sometimes have overlappings, and a 5-wave pattern tends to do so. It is not the highest probability that this is a leading diagonal, but it is still possible. So all indications are giving me some doubts that this is really a corrective pattern in this case. So I would not prefer this one because I'm a little bit afraid of this pattern giving me an entry point at that way and then turning around on the other side. However, if you would like to do that, it's okay, because if you trade this as a long entry, which is a little bit doubtful, but if you try to do so, you can easily stop the market here at that point. So this is roughly a 50-point stop. And you have targets. If this is triggering here, you would estimate that the market will continue, leading us to 2,100 or at least above this level or even higher than this. So you can see, okay, it is a $50 risk. On the other side, you have 300 or even more on the bull side. So whatever happens, it is I think a reasonable risk-reward ratio to even trade this trading idea. So if you prefer this one, you can do this, but you have to keep in mind there's a chance of a failure, but this is countermeasured with a risk and reward ratio, which is quite okay here in this case. So you could try this as well. So if you're a little bit more an active trader, you can choose to have a closer look at this pattern here, which is giving you an entry on a lower time frame, giving you a better price, maybe better risk reward ratio, a way better risk reward ratio, because the targets may be nearly the same like this one, and the chance to easily trail the stop to something around break even before the market turns around again. So I think there's a good chance if this occurs. If this is not occurring, or you don't have the time to check this, then you might think about this, entering the market here, breaking through this level here, and accepting the chance that this will occur, that the market will go down for, let's say 1,600 or a little bit above or below that level here. You may have to accept this, but the payment will be the risk-reward ratio, which is maybe good enough, I think, to keep this situation running. Okay, now let's switch to silver, because silver is also something really interesting, because we were talking about silver constantly, let's say it like this, but a few weeks, a month ago, we were saying we should have in mind that the market has a good chance to reach this area here first, before turning around and turning into a bull market. And exactly that happened. The market came down. This is quite typical. So it was not given, it was not a promise that this will happen. Nobody knew that. But on the other side, it was so typical that we kept this as a valid idea, and to be honest, hoped a little bit for that, because this is giving us a conclusion that the bear market have a good chance to be over now. Is it over now at the very moment, or is there a chance that the market will continue to the downside because we are way off the trend channel line? And yes, it not necessarily needs to reach the trend channel line. It is just to give us a lower low, to give us a new start for a bull market, because the last one was this low here, and the subsequent chart was not in a really bullish mood. You could see that the market had a lot of overlapping here on the upside, which is not giving us the idea that this is a real impulsive move. This looks like a corrective pattern, and of course subsequently the market came down. And now we have a new chance for an entry. So what we've seen here from that very low here to that high, which was a one bar move to the higher levels here, you could see this is not a one bar move, but it's nearly similar strength. And you can see this looks a little bit like what we've seen in gold. It is a little bit different from the exact pattern, but it's a 1, 2, 3, 4. Maybe currently we are in a 5 wave, and maybe the 5th wave ends already, and now we are in a corrective pattern. So the same idea we had in gold is working on a lower time frame, at least is working here as well. So we can expect that the market is coming down. No, not that level. From the lowest to the highest point, always taking the whole distance, not only the body of the candles, for example. Some people are asking me, is it the body of the candle? No, it's the tail. That's really important. The extreme points here of the market, the very low and the very highest point, you can connect them with a Fibonacci indicator, and you get these levels here. And you can see the market should go in these typical area, 38.2, maybe 50, maybe 61.8, not far below that, I guess. It's not very good when the market is reaching this level. If so, the market is killing my positive idea of buying this market. So I would like to see that the market is coming into this area roughly. Can be a little bit higher, it can be a little bit lower. Don't be too picky here. But I have the last line of defense here at that level, which is 21.71 roughly. You can see as long as the market is staying above that, and as long as the market is coming there, not in this movement. I don't like to see this movement because this is a really strong move. If the market is coming down in something like this, or in something like an ABC pattern, whatever it will be, then everything is good to announce this is a corrective pattern, and we can enter the market on the bullish side after this when breaking through the B. I can redraw it, A, B, C. When the market is breaking through this level, this is my entry point to buy the market, and expect that the market has at least a chance to continue something like this again. So this is most of the time my minimum target. But in this case, if this bearish market is over already, we have a chance that we will see something above 30, and more or less that we see something in the same size like we've seen here before. So we can just draw something in the same length, something like this. We can easily think of even 40 or something around that when the market is continuing in a first wave, in an ABC pattern, in a third wave here, or an ABC pattern in the big picture. Whatever it is, it all leads us to 40. And this is a really nice price for entering the market now. So it is nearly double the price in the next few months, if this is the case. The only question is this already the low? Currently, I would say there's a good chance that this is the low, especially when this is a corrective pattern here. You can enter the market here and try to keep the position running, or to build it up step by step when gaining further and further, or whatever you like how to do this. I at least see there's a very good bullish chance. What will kill my bullish chance when the market is not coming down in an ABC pattern now, or something in a corrective pattern, like something like this, for example. If the market is not doing this, if the market is coming down in a strong way here, you can see sometimes that you have a strong movement, and on the other side you have also a strong movement. But there's no chance you can mix it up and see, is it this one or this one? It's easily to see, no, which one is a corrective part and which one is a strong part. If you have a strong part here to the downside, and even some corrective pattern, like you have seen here, A, B, C, for example, or something like A, B, C here, for example. Or if it's not an A, B, C, maybe sometimes it is something like a back, forth, back, forth, back, forth. So it is overlapping here. As long as you have this, it's a continuation to the downside. So in this case, if you don't get some corrective pattern here, you can turn to the bearish side again and check if you have some corrective patterns here, some ABC patterns here, like you have seen before. For example, here strong to the downside, shaky to the upside, continuation to the downside. So it's really important to see this one. Of course, for this nearly weekend, I'm a little bit late this time with the video, but normally one time a week I have an update here on these marks. So I have a second week here on the gold price. If it happens in between the next videos, you can check by yourself. You exactly know what we are looking at now, and if you find the situation well, and if you like to trade something like this, you can think about that. If you see that the market is strong to the downside, you can stick with the bearish market, because I think that the market is not necessarily in the need to move forward now. We still have a little bit more space here on the lower end. So if the market is going to 21 or even below 21, it's still valid. It's still not killing the idea. It's only postponed to a later occurrence of this part here, depending what the market is giving us now. So I hope this finds you well. I hope this is helping you with your own trading decisions, with your own eye, or checking the markets by eyesight. I hope this is helping you a lot, and I'm crossing my fingers for your own positions. Looking forward to seeing you soon. Bye bye.